Telstra, 4,500. South Corp's also in
the Aussie dollar continues to do
Australian economy.
Really nice jump for Woodside.
The bigger story of the day.
Major relaxation of tariffs are what is driving this market.
A lot of news coming out.
If it's making news in Australia, we've got it covered. CNBC Asia. Profit from it.
The following segment of Squawk Box is brought to you by Boeing.
And welcome back to Squawk Box. Let's get back to Joseph Tang. Sun Hung Kai Securities. Also joining us is Philip Chan, Research Director at Shenwan Securities, and he's with us in our Singapore studios. I want to direct the first question to Philip. Still on the theme of Hong Kong stocks, I mean, what is catching the attention, of course, in Hong Kong is H-shares. They've been really surging ahead this year, doing even better than the Hang Seng Index. Right. There's a bit of consolidation setting in. Is there more to go?
There is, yeah. You know, just looking at it over the longer term, they've actually been rising since October last year. Mm-hmm. And so the pullback that we've seen since October, beginning of October, I think is just a start of a trend, because that was basically initiated more by the reduction in the the increase in the reserve rates.
What is actually driving up H-shares? I mean, over the past year, is it more speculative activity, or is it something fundamental that's driving these H-shares? I mean,
it's mostly fundamental, because the operating performances of a lot of the key sectors, basic industries, has been very strong over this last year in particular. Subject to, it's basically because of the capital investment that a lot of these companies made in the last 2 or 3 years. Okay.
Philip, Joe Tang from Sun Hung Kai is here. I think I'm sensing a bit of a battle here, because you seem to have some divergent views. Joe, what do you think of what Philip said so far?
As long as for the H-shares, basically I would agree with Philip. Probably the upside on the H-share index will be fairly limited. But I would argue one thing, or basically I would just highlight one thing, is whether people will come back on the theme of QDII or whatever the name they call it, because I suppose the PRC government will at some stage try to deregulate the fund flows of the China pension, the Social Security Fund or the insurance fund industries, i.e. then probably there will be some overseas investment outside of the PRC and into Hong Kong. If that's the case, then probably we will revise the outlook for the H-shares index.
Okay, Philip, so Joseph kind of concurs with you as far as the China concept shares goes. Right now we're seeing the spate of IPOs. I mean, China seems to have really released the herd, and it's they're free to flow right now. I mean, we've had the insurance companies, got China Life, $2.5 billion coming onto the market next month. Is this a foreign currency manipulation play on the part of China, Philip, or are they sincerely just interested in developing their markets ahead of WTO liberalization in '06?
No, I think they do want to develop the markets. You know, there was not a moratorium, but there was few new H-share listings up until the end of last year. Now we're getting more, basically because the interest in China has come back. So basically demand is fueling this as well. As I said, the existing H-share block of H-shares, we expect that to sort of drift down over the next few weeks. But new issues which are coming up, such as you say, China Life, and maybe some of the smaller ones we think will do quite well.
Okay. Still on the investment theme, I'd like to direct this next question to Joseph. Joseph, given what you said, I mean, you think there's still a bit of upside in terms of H-shares. What would you be playing in the overall Hong Kong market? Would you be sticking to the China theme? What exactly are you looking at?
I think for the market as a whole, probably 2004, the focus will not be so much on China per se, i.e. we will not be buying H-shares or red chips for the sake of just being H-shares and red chips. But then again, in 2004, we're still quite bullish on the commodities plays, and a large part of them basically are listed or available in the X-share. So from that perspective, we're still pretty bullish on some of the, say, petrochemical stocks or base metal stocks. Apart from that, within Hong Kong, we are very bullish on banks because probably the industry is underestimating the earnings recovery. And again, on the controversial side, we are quite bullish on property as well.
Philip, so Sun Hung Kai is bullish on the financials, property, banks, commodity plays like the copper companies, I presume, as well. Correct me if I'm wrong, but I think you were more bullish on the industrials. If you take some of the textile plays, they've really come under fire in the last few days because of this, you know, the initiatives by Washington to clamp down on exports of textiles. We've talked in the past about companies like Fountain Set, Gloria, Sun, Tex Wink. Have you changed your tune on the Chinese industrials?
No. I mean, we're not really bullish on these. It's just that we think that the downside that you've seen is just a short-term factor. I think that interest will come back. We do agree with what Joseph said on, say, selected commodity plays such as Angang Steel and maybe some of the petrochemical stocks like Yijing Chemical in China. These we selected companies within those sectors we think will do quite well.
Okay.
Yeah.
Philip, we want you to stay with us, but we want to thank Joseph Tang, Sun Hung Kai Securities. Thanks for being with us today, Joseph. See you next time. And we'll be talking more to Philip Chan, Shenwan Wangko Securities, right after this quick break. Don't go away.
The segment you've just...
Well, the Commerce Department says the Sichuan was exporting, Changhang was exporting at a dumping margin of 46%, TCL at 31%, and Conca at 28%. Philip, what do you make of all this? I mean, we've gone from steel, which doesn't affect the Chinese so much because they really use a lot of their steel. It's not like the EU in the steel case, but bras are serious business in China, and TVs are serious business, with the biggest TV maker in the world headquartered in China now. Sorry, sorry about the bra comment there. I was just being a bit flippant. This trade spat, is it all going to come to naught? Is this just hot air, or do you think it's going to actually have economic implications? Because if this drags on another month, it will hit Chinese business.
I think, yeah. I mean, it's if it does drag on a little bit longer, it will. But so far it's had limited impact. It's had more impact on share prices, you know, to do with the companies in those sectors. As you say, textile manufacturers in China have been hard hit over these last couple of weeks. However, I think you've got to remember that a lot of these companies have been driven up very strongly. Particularly over these last few months, and that goes with even what we were talking about before, some of the H shares. So some of this, for different reasons, this pullback that we're seeing is probably necessary in the short term. I think for the textile sector and some of the others you mentioned, the risk factors for those sectors have been increased now because of this trade spat.
Philip, could this have broader implications? I mean, we've talked about textiles, we've talked about steel. Could this have broader implications for the transportation sector? Obviously, there's a lot of business loss from this toing and froing. The transportation sector, stocks like Cathay Pacific, for instance, they would get badly hit, won't they?
They will be affected. I mean, they were weaker yesterday. We expect that to continue to affect the airline companies. Yeah, even the ones in China, like China Southern Airlines, China Eastern Airlines, to a certain extent. So yeah, over these next few weeks.
Phil, yesterday, the main market movers were the drug stocks. You saw the news as well as we did about China starting a vaccine trials for SARS on humans after animal clinical testing. Now, we just had a guest on from another company who said that vaccines are probably not going to work in the case of SARS because it's a mutating strain of the coronavirus. You know, China Pharmaceutical has been something of a hit. There was another one yesterday there was another drug company that hit the Hong Kong market, a China-based drug maker. Is there much of a future here? I mean, is their technology actually up to par?
Well, it's not really technology. I mean, remember, it's the product nature. I mean, China Pharmaceutical is more on the vitamin side. We expect that there may be some knock-on, there may continue to be some knock-on effect on some of these stocks, but it's really, you've got to look at their product nature. They're not really in this sector.
Philip, I want to ask you about China Life IPO, planning to list in Hong Kong and New York. That is going to be the biggest IPO this year. Everybody's watching closely for that. Timing-wise, investors, I mean, they're using that time basically to book in their profits before the year closes. How much of a boost will this be for the stock? I mean, what are the implications for the stock? And do you like the company as a whole?
No, I think the company itself looks good, and it's generally considered to be one of the better ones of the three that are the insurance companies that are on the list. It's also, like you say, the biggest, and the prospects. You know, bearing in mind that it's in a sector which until a few years ago was fairly taboo in China, but that sector is expected to grow very strongly over the next few years, in particular. So we think that the share price performance will be pretty good.
Okay.
Yeah.
Well, we'll have to wait and see. Philip, thanks again for coming on the show. Good to have you.
Thank you.
We've been talking to Philip Chan, Shenwan Wangkwa Securities, talking to us in our Singapore studios. And coming up next, in the next hour of Squawk Box, the April rally in Japanese stocks and a brighter economic outlook is expected to give Japan's major banks an earnings boost this fiscal half. Brad Fishcorn from Thomson IFR previews the numbers for us. And South Korea dodges a possible